Crypto assets and crypto trading is something that most people hear or read about, but a lot of the time they don't know what it actually means. With crypto making headlines every day, it is important that we understand what it means, especially if we want to have a piece of the pie to ourselves too. Welcome to the Driven Billionaire channel, the channel that helps you understand the crypto world, so you too can make money in crypto. In this video, we will explain what crypto assets are and what crypto trading is, so make sure to watch until the end, so you can make better decisions when it comes to investing your money in crypto. A disclaimer alert is now in effect. This video is for informational purposes only. We recommend that you always seek professional advice. Let's begin. So what are crypto assets? Well, crypto assets are digital assets which use cryptographic techniques that usually generate a medium of exchange of financial transactions, usually in a peer-to-peer manner, or to link ownership to unique physical or digital assets, such as works of art, real estate, music, or videos. Cryptocurrencies, NFTs, utility coins, security tokens are all different types of crypto assets. A crypto asset is a digital or virtual asset, which is encrypted and secured. Digital assets use cryptography to secure financial transactions, create additional units, and verify the transfer of assets. In contrast to fiat currency and central banking systems, many cryptocurrencies are decentralized systems based on blockchain technology. Crypto assets represent a seismic shift in the financial markets and the internet as a whole. They have been growing in popularity by the minute, and even after what we have seen with NFTs, the technological advancements behind crypto assets have come a long way. Different investors choose to approach this new class of assets in different ways. One of these ways is holding their crypto assets and not selling it at any cost, regardless of a bearish or bullish market. These investors are known in the crypto industry as hodlers, which have a plan to accumulate as much crypto assets as possible through long periods of time, sometimes planning to hold as long as 10 to 15 years. If you are into holding, then you might want to look at the Hodlers Club. From cool hoodies to awesome mouse pads and t-shirts, the Hodlers Club definitely has the crypto merch that you will want to hold. The link is in the description below. Now let's get back to it. Other investors choose to use more traditional strategies, such as buying cryptocurrencies during a bear market when prices are low, and holding until a bull market reaches around its peak, and then selling at high prices. Even though many people choose to go with this strategy and are very profitable doing so, it is hard to time the markets, especially the crypto market. So if you choose to go with this strategy, be careful and make sure that you know what you are doing. Keep in mind that these type of investors are the ones that actually buy the crypto asset and own its keys. Even though investors are trading crypto assets when buying low and selling high, it can be misunderstood with trading crypto CFDs. And these are two completely different things. So what is crypto trading? Crypto trading is the act of speculating on cryptocurrency price movements via a CFD trading account or buying and selling the underlying coins via an exchange. CFD trading is a derivative that enables you to speculate on cryptocurrency price movements without taking ownership of the underlying coins. If you've ever heard of day trading, this is it. You can go long, buy, if you think a cryptocurrency will rise in value, or short, sell, if you think it will fall. CFD is a leverage product, meaning you only need to put up a small deposit, which is also known as margin, in order to gain full exposure to the underlying market. Your profit or loss are still calculated according to the full size of your position, so leverage will magnify both profits and losses. People who do crypto trading are usually referred as day traders, since they usually hold their positions for shorter periods of time than hodlers. If you choose to get into crypto trading, there are a couple of terms you must understand other than leverage: CFD contracts and cryptocurrencies. The first thing you must understand is margin. Margin is a key part of crypto trading. It is the term used to describe the initial deposit you put up to open and maintain a leverage position. When you're trading cryptocurrencies on margin, remember that your margin requirement will change depending on your broker and how large your trade size is. Margin is usually expressed as a percentage of the full position. A trade on Bitcoin, for instance, might require 50% of the total value of the position to be paid for it to be open. So instead of depositing $1,000, you'd only need to deposit $500. The second thing you need to understand is about the spread. The spread is the difference between the buy and sell prices quoted for a cryptocurrency. Like many financial markets, when you open a position on a cryptocurrency market, you'll be presented with two prices. If you want to open a long position, you trade at the buy price, which is slightly above the market price. And if you want to open a short position, you trade at the sell price, which is slightly below the market price. The third term you need to understand is lots. Crypto are often traded in lots, which are batches of cryptocurrency tokens used to standardize the size of trades. As cryptocurrencies are very volatile, lots tend to be very small, and most lots are just 1 unit of the base cryptocurrency. However, some cryptocurrencies are traded in bigger lots. The fourth and last term we will be explaining is pips. Pips are the units used to measure movement in the price of a cryptocurrency and refer to a 1-digit movement in the price at a specific level. Generally, valuable cryptocurrencies are traded at the USDT or dollar level. So a move from a price of $190 to $191, for example, would mean that the cryptocurrency has moved a single pip. However, this can differ, and some lower value cryptocurrencies are traded at different scales, where a pip can be a cent or even a fraction of a cent. There's much more when it comes to trading crypto or other assets in general. Patterns, price movements, fundamental analysis, and the list goes on. Therefore, if you are interested in it, make sure that you study it well, so you don't go sailing into unknown waters in search of that easy $1 million button. To conclude, before choosing whether you will be trading crypto or hodling it, you need to consider the risks, and you should study well before putting your money into anything. The crypto world and DeFi have insane amounts of opportunities to make money. It is a market that isn't going anywhere, and if that means waiting before making any moves, then you might be better off that way. Although, having some bitcoins put away would never hurt. Not financial advice, of course. Hope you guys have got value from this video, and if you did, please smash that like button and subscribe to our channel. Also, don't forget to check out the Hodlers Club store. The link is in the description below. See you guys next time. Take care.